Chris. Can you guys see my screen?
All good.
Sweet. So, I had the unfortunate but awesome opportunity to launch my business and really go to market right in the middle of the pandemic. I think we sold our first policy in May 2020. And so really that was kind of the nexus of this whole talk and this presentation was how do you really understand why your business is doing well or struggling at times, and what aspect of your product or your distribution do you really need to address? And are you listening to customers in the right way as the new world kind of demands? So, kind of my background, I'm a lifelong learner. I went to Miami University for undergrad, studied business and entrepreneurship, went to law school at Ohio State because I realized I kind of wanted more of a regulatory and compliance background, and a little bit of understanding around kind of entity formation and kind of transactional work as well. Did a pair of master's degrees at University of Virginia and Asade in the middle. Studied in China and Spain and Israel. Really learning from some great startups and organizations along the way. And through that process, I was able to found a couple of businesses of my own, as well as work for a couple that had various levels of backing. And today I am the founder and CEO of Bingo Dog Insurance. We offer pet insurance right now in 13 different states through a mobile app and a website. We use AI and big data to actually customize plans more than any of our competitors and bring prices down. We're currently rolling out an API that allows us to work with partnerships for embedded pet insurance and other fintech products within existing distribution channels. So employee benefits, veterinary channels, and so on. Now, take my advice with a little bit of skepticism. I've really only worked at an early stage, so my business might not always translate into kind of other businesses. And of course, really only for profit. If you run a nonprofit, your business might be a little bit different. But I really kind of approached it with the idea of focusing on Horton and this idea of the entrepreneur's journey, where it really is a marathon, not a sprint. You're constantly dealing with different feedback loops, investors, advisors, customers, and so on. And that requires a kind of an agile, nimble approach, but also understanding when and how to classify feedback because otherwise, you might find that the tail wags the dog, metaphorically, or another situation where you don't always feel in control of your business. So, to start really at business idea inception, you're really trying to figure out what problem or idea you're excited about, and you've got this MVP. It's characterized by experiments and initial traction, often in the form of qualitative feedback from friends and networks. They're more inclined to tell you they support your idea, but less inclined to actually purchase in the long run because they might have reservations. They might not actually be indicative of your target audience. Um, and more importantly, they might give you too much feedback every time you go home for dinner or talk to relatives on the phone. Uh, but it also takes a while to achieve product market fit, especially if you're in pet insurance or a business like that, which is emerging. Only 2% of dog owners in the US have it, which really only means a subset even are aware. So when we think about the customer cognitive journey, they're really in kind of this need recognition phase, whereas something like a car insurance might be further along. It's alternative evaluation. They understand how car insurance works fundamentally, and now it's a matter of how are you distinct or differentiated. So that's kind of when I bring up these stages, and I'm talking early on right now, idea phase, inception of the journey. It's important because the feedback has to then translate into product a little bit differently to adjust to that product market fit. And it's a marathon, not a race. We've gone through so many different iterations of our product. We've been direct to consumer. Now we're really heavily partnership oriented, B2B to C. And it's important to find people that support wherever you are in that journey, because you might have customers that are really empathetic and others that really just care about performance, and that kind of depends on where your business is at. So it starts with this idea of a whisper or an inkling. That's the little voice on a dandelion that says, I want to deal with pets all day, every day. And it's a piece of feedback or a clue that you want to evaluate differently. For me, it was a coworker at the time that had missed about a week of work. And when he came back, I said, Hey, what's up? His dog had tore its ACL trying to climb a tree. 3-year-old dog. He had spent a lot of money, and what I had to do was immediately try to understand whether that was a situation that he was forced into or could have kind of seen around, whether there was a better solution, and ultimately would he pay for that solution, being pet insurance. So I kind of started down this qualitative question and answer feedback approach, trying to understand what exactly about that price made him kind of default to his own savings as opposed to buying an existing pet insurance plan. And then I had to kind of understand and couch his background. How much did he make? What type of job did he do? What was his predisposition to risk, right? Because what we might find is that we really only need to empathize and approach with 20% of the US market, because those are the dog owners that are passionate about their pet's health, but really might not have the savings for the type of circumstances we provide for. And if we're selling to other people who we don't necessarily fulfill their need, they might buy it, but ultimately be dissatisfied on claims, might have high churn. It can affect our unit economics in the long run, and so on. But basically, at that idea phase, it's really about classifying that feedback, understanding how the market dynamics are functioning, whether this is a spot you can even succeed in, and whether customers will understand what you're selling. For the longest time, we didn't understand how important, and one of you guys mentioned that you did consulting work with branding and copy. We didn't realize how important that was. Understanding and educating the consumer, both in terms of what pet insurance is, but also the expectations around the claim. And later on in kind of that sales and community process, because ultimately we're trying to retain people for the long run. Insurance is one of those businesses where, like anything in financial technology, you tend to have a high customer acquisition. So it's imperative that you fit their needs and you can kind of um, measure their response in the long run. Bad customers are a problem. And then find a representative sample. So I had this friend, a 3-year-old dog, tore its ACL, expensive kind of expense. And I wanted to figure out what are the edges of that. When would people need to finance something? Is it $1,000? Is it $100? What are those thresholds for different people and why? And it might be because they only have a certain amount in their savings account. It might be the age of the animal, and in their mind, whether they think it's something where this can prolong the life of the animal, as opposed to this might just be a temporary fix. And then, kind of, when you think about those open ended responses, don't rush to build a solution. Ultimately, we built a solution that was very indicative of our first few customer feedback, which was we would love to have it on the phone. We'd love to be able to just get it directly from you. And while that might have made sense from a customer experience standpoint, it didn't make sense from a customer adoption standpoint. A mobile app has a high level of friction. And then from a business model standpoint, the unit economics and the service we are able to provide is so much higher if we took different distribution approaches. That was just one example at the early stage where we should have been more broad and had more kind of open-ended responses. Um, and then when you're ready for to actually build that first MVP, customer feedback is really about the interaction. Do they understand intuitively what you're doing, and are you not overbuilding? I used to have this problem on a few of the earlier products I built for other businesses, and I've seen it at larger companies. You spend a long time trying to build this MVP, And as a result, you might build features that no one wants to use. And so, a trick and a rule of thumb that we like to have for an MVP is build extra buttons that don't do anything. So, if someone clicks on learn more, we know that, okay, they actually are interested in expanding on that. Or if they click on the page for veterinarians, we know that is something we should prioritize building over benefit brokers. And that way, we're not necessarily saying, oh, we have to build this page before we launch or before we kind of advance our business. And that was a really big fundamental shift. And one of our advisors actually encouraged us to take that a step further with how we expanded our MVP moving forward. And it's really about traction and insight with this MVP. Can you get people that say, yes, I would want to use that? And then can you understand how they want to interact with it? A lot of times early on, we would do this through recorded customer interviews. So we would have a script that we made of questions we like to ask, a lot of them open ended. We would have a Zoom window, and then we would have them share their screen with the mobile app or with the website on it. And we'd have them walk through the process, kind of talking through their insights. We based this off of a good book by Jake Knapp, Knapp, I believe, who worked for Google Ventures, and it's called Sprint. And the whole philosophy was you'd spend a week designing an MVP and testing a critical assumption, and then that last day you'd work with five representative people, and that would be indicative of enough feedback because it's the right subset of how your MVP would work and function. We, from experience, tend to do it in about a day, and we tend to focus on smaller points of our business that are not going to be our long term competitive advantages. And this is another thing we struggled with. Early on, we wanted to be the best at everything, and that really slowed our business down when we became too granular with everything from font sizes and font types to the copy we used across the board. We needed to be a lot more willing to let our different user facing um, copy and experiences and promotions um, be at different stages in kind of their maturity and development. So that way we can see if there was actually any improvements, kind of using that as a baseline. And that was something that we're still doing today. We would rather get and make available more channels for people to reach out to us with things that really bother them or things they would really like to see, as opposed to pushing features and services onto our customers. Um, that's been a really counterintuitive approach. And we do that because we want to feel confident that we're moving in the right direction. Like I said, the tail wag the dog and committing to a strategy. We only have a certain amount of resources at this stage. We want to make sure when we dip our toe in the pool, it's warm enough to hop right in, um, if that makes sense. And then ultimately, what are the milestones that's going to achieve? Early on, we would mock up features that would improve your dog's wellness or help you with flea and tick medications. But ultimately, if that wouldn't actually improve your experience, if it wouldn't cause more people to adopt our product, we need to acknowledge that that should have been on the back burner. And part of that was experience, with our product and our market itself, and then part of it is really what this talk is about, which is experience and understanding and diagnosing the feedback into product improvements. And Chris, if I'm going too fast or too slow, just let me know.
This is great, Matt. So thank you.
Cool. I'm just gonna keep plugging along. And then comes to a time when you get too much feedback, right? People are telling you too many things, and more importantly, they're telling you you need to listen more. And so you're getting feedback from 1,000 different community members and investors and customers, and you really don't. You almost feel paralyzed. At least I did. I don't want to generalize that too much. In terms of what direction do I want to take this business? I've got potential partners who want certain things. I've got existing customers who have problems with their accounts or with signing in. And I've got investors who want certain milestones or achievements to be hit. And you have to juggle that and convince them that you're actually on the right track. And what I found is that is because you're bogged down too much in the process and committed to overbuilding for scalability. One of our advisors told me maybe 2 months ago, he's like, "You're in a brilliant spot. You don't have a lot of customers to disappoint." And it felt kind of bad at the time, but he meant it in a good way of you can afford to take risks, you can edit things in real time, you more proactive in how you build and responsive and customer support. And it doesn't matter if they need help changing their password if they can reach the CEO within an hour. That was his approach. One um, one app that I think does this extremely well at the moment and did it extremely well throughout COVID was Clubhouse. If you've seen, they've had a lot of user growth lately, but the invite only approach allows you to throttle your build from a scalability and a user experience standpoint. The last the best problem to have is you have too many customers. And it's the problem that you want to worry about, but that you probably don't have. It's how do I acquire more customers and get them a product or service they need? And to do that means building more quality and less scalability, if that makes sense. So less consistency. If it breaks for one person, but it's awesome for nine, that's a huge win. So that's kind of the mentality of you want to build less with the expectation that you're going to have to rebuild down the road. But when you rebuild, you're going to have more resources, more insight, and you're going to be able to build fast because you got to market earlier. That's the approach. It's kind of like a second mover advantage with regards to product, not with regards to maybe business model organization. And most people are either doing lots of, like I said, you're bogged down in the process with either lots of meetings and little building or lots of building and little insights. And so really it's streaming it together and making that triage of kind of pipeline. One thing we do for this is we will not make any change that a customer requests or a feedback that they provide unless two individual people unsolicited bring us the same piece of feedback. Because that to us is an indication that it's a bigger problem, it's a bigger demand, and we're not just going to be building a one-off. And even though you might say two's a small subset, what if it's only 2 out of 50, 2 out of 1,000? It really starts to get at kind of an 80-20 rule. 80% of problems, it's only going to be one customer. But really, it's that 20% that they want their spouse to be able to log into the platform, or they want to be able to have cancer coverage for one dog but not another. Those are the things that really will make an impact. Um, so it's really about building that vision and the triage based on what is the priority. Now, if the caveat to that is if your priority is not customers, if it's investors or if it's partners or so on, then you might need to kind of triage accordingly. This talks really about customers. So within the context of customers, try to batch your feedback from them as much as possible and set expectations. Then you get to a point where you feel pretty good about your traction milestones. This might be at the Series A, this might be at the Series C level. It might be just your small business or your service organization feels confident enough in the way it operates. You do one project for a nonprofit, and now you feel really good turning that into a system or set of processes for multiple nonprofits moving forward. A good example with our business is we just worked on an implementation with an insurance aggregator. So they specialize in selling a variety of different types of insurance. They didn't have pet. This was a first for us. We'd never worked with this type of partner. So it was the first time we made our legal documents and approached them about the partnership and gave them a demo. Now we have that foundation for other customers of a similar vein. And that's been probably the biggest piece of advice we've gotten at the early stage in between you're ready for an MVP and turning projects into processes is find an initial customer that's repeatable, that there's multiple of them like it, that you don't have to build a whole new pitch or a whole new implementation around. Um, and it's so much easier at that phase or at that kind of um, point in time as a company to define a customer segment than anything before, which is really just a guess. We think we're going to sell to millennial females who their dog is their first child. That's just kind of an intuitive guess. Whereas the idea of we just made this partner, it's an insurance aggregator that didn't have the capability in pet. They reached out to us, we got this implementation done. Now we're going to go find the next 19 insurance aggregators that have similar dynamics. That's just to kind of contrast things. But really, you're then approaching these projects and turning them into processes. Around customer feedback, that's how do you batch support of existing customers? We call those users. And then how do you intake and entice um, what we call visitors, which are people that are leads. They're thinking about buying it. They're exploring pet insurance. They're just curious, if that makes sense. And that's really about can you build the internal communication systems to process that feedback when you're not going to see someone in person, especially with COVID. So the way we did that is we did a daily internal stand up. You either get on for a 15-minute call or you type it in Slack, kind of what you're working on, anything you're blocked and what's coming down kind of the pipeline. We try to use as few tools as possible. It gets too hard to build a culture and um, move fast if you've got 30 different project management tools and systems. We really like Notion these days. I don't know if anyone's used anything, but it's a nice um, mix between project management and repository and that stuff, but really like Notion. And then also kind of customer support. Do people have ways to reach out? Um, One thing we found early on is people are like, we weren't sure how to contact you. So we needed to open up more channels. Later on, it was we had plenty of ways to contact you, but we don't want to contact you because there's these certain things that aren't working um, repeatedly. That's when you know, okay, it's not about the communication, it's about the product, but you've got the right systems in place. We like to use alerts for edges or routine functions. This is something that we had to grow into. Earlier on, it was customer has a problem, we need to fix it. Right now, or we need to automate, we need to automate, we need to automate. Right now, it's can we do something manually until it's hit a scale where we have to automate. And so in the meantime, instead of spending 10 days maybe automating a claim FNOL process, what we would do is set an alert that a claim has been submitted, and then we will manually forward it on to our partners and make sure it's all right. That allows us to kind of understand our business a little bit better at these early stages, the critical processes. And then more importantly, it allows us to move faster knowing that nothing's broken, even if nothing's automated or moving quickly. So we like to templatize and use systems for these heavy touch points. And like I said, always be pushing higher level concerns. I use an Eisenhower matrix. It's about urgency and importance. You want to be touching the very important, very urgent things first, then the important, less urgent, then the urgent, unimportant, and then the not important, not urgent. But using that matrix really helps me focus on the higher level concerns that really will help us hit our milestone. If the only thing that matters before we run out of money is we get 1,000 customers, it really shouldn't be a concern for me about claims if we're only going to lose 10 out of 1,000 customers in that timeline with a bad claims process. So that's really something about kind of understanding the altitudes of what you're building. Um, Really, it took a lot of time, and COVID made that more challenging and made feedback more important. I know I kind of got away from the Horton Hears Who reference, but basically, he's traveling. He's trying to. He's got this idea, this little voice whispering to him. He's trying to build momentum and this idea around it. All the little people, the Whoville people are banging their instruments, and ultimately the goal is to then get these systems in place where you make enough noise where all the other jungle animals in the jungle, aka the marketplace, understands and aligns with your vision. That's kind of the big point I'm trying to get at in the weeds. Apologies for that. And then kind of some final thoughts on what does scaling even mean. You've got this deep understanding of your audience, right? You've done some recorded videos. You understand how they're interacting with your MVP. You've triaged their concerns, and you feel like you're approaching them in the right way to achieve your business objectives. It should not feel like an uphill battle providing a product service someone needs. And I learned that early on. It was like, why is this so hard to sell? And then someone gave me the blunt feedback, well, it's because no one wants it. And so it's like, how do we adjust what we are doing to what people do want and then find the people that want it? And that was a real adjustment as kind of a young entrepreneur um, that I think is important. And then every new user should receive and provide more value to others in the business, even when it, and I mean that operationally and from a feedback standpoint. Understanding that one customer has a question about payments, you should not you should find a way to store and accumulate that sort of knowledge for further support. I think Squarespace and some other sites do a great job of this. Of if you reach out with a question, they already have the archived like blog post with a video and 14 hours of intern work already for you that explains exactly what you need for any problem. And that's what I mean by kind of building positive feedback systems. It's that everything you do should accumulate and make things easier. And when I say uphill battle, that's just a gut check. When you're doing all this customer feedback, it should be getting easier to sell what you're doing. If it's not, you're kind of moving in the wrong direction. And then, like I said, the distribution in core products been figured out. So it comes down to the scaling of the economics. We don't have to really worry about that at our stage, being a startup, technology oriented. We're trying to grow fast and build a competitive advantage. We can really focus on the early adopters. And I think it's Jeffrey Moore. It might be a different author, but it's a book called Crossing the Chasm. The needs of the people we have early on, tech evangelists, um, the niche person who just goes crazy about their dog, is very different than even the early majority and then kind of the indifferent majority as you go down kind of this um, a product maturity kind of roadmap. And winning those customers requires different copy, a different product. So making sure you're classifying customers as you scale into those buckets. Early on, it's like, can you get any customer? Later on, it's this is a customer who is joining us because of our legitimacy with other customers. And so we need quotes and we need ratings. That's more the classification and the stratification that comes in a little bit more mature than really where my business is at today. But that's something to keep in mind if your business is later on. And really, scaling is about providing what you do to a whole new world. And that's my pitch for being high growth startup, taking venture investment. There's a lot of negatives, and a lot of people like to talk about kind of the pressures associated with being high growth. But really, you're not just changing one dog and one dog owner's life, you might be able to change a million dog owners' life. And you're responding to more people's needs and ultimately providing more customer support. And that's why I'm an entrepreneur. That's why I do it. And ultimately, that's why I chose to talk about customer feedback because they're what matters most to my business. That's I think all I got, Chris.
Well, that's awesome, Matt. Thank you so much for sharing this. And I was taking copious amounts of notes here because uh, it's interesting for me to listen to this because I had a conversation with someone who's an expert and does voice of customer work, and so you hit on a lot of the same themes that I have been thinking about. And so this is kind of our opportunity for our next 19 minutes to ask Matt questions or open conversation. So I have I'll be generous with everyone's time and just start with one and, and see where we could go. But Matt, I know you're a very uh, you're a data driven guy, and you, I mean, that's part of the business is that you've built in the that side to it. So I'm curious, for as you've been on this journey for yourself with Bingo, how do you meld the data that you're obtaining from people? And I really liked how you said you're not going to fix for one customer, but if two, then that might be a trend. But how do you meld the data with that voice of customer where it might be more anecdotal? And how do you bring those two together?
Yeah, they absolutely have to go together. I think the best and most compelling way to do it is to start with a story, a customer story. This customer came to us and they had a problem with a white screen when, or they had a problem where they tried to pay and it charged them twice. So then we had to decide, okay, is this a problem for everyone? Is it only someone who's button mashing? What is the cause of this? And is it something that's worth fixing now? And then kind of to your point, figuring out the data. So, okay, in the next 10 people that bought, this problem occurred 3 times. Okay, well, messing up someone's payment, probably a pretty big deal. 3 out of 10, probably a much bigger deal than 1 out of 10. Um, is it something that's easy to fix? That's another concern. We are constantly juggling engineering hours. So if we can find a quick fix or a band-aid that someone on the on the business team or the ops team can address, that is so much more efficient than taking time out of the engineering roadmap. But really, it's telling a story with an initial anecdote, following that up with the quantitative data, hopefully within our product. Now, if you're earlier than us, you might not have the product data. If you're later than us, all you need is product data. At our stage, we typically like to follow that up with some market stat. For instance, um, we've had a thing going on with claims. So let's say a couple of people have worried that their claims have taken a little while. So then we want to figure out, okay, is it really taking a while or is it their expectation? So we then say, okay, on average, it's taking us 1 day. That isn't a big deal because our competitors are doing it on average within 48 hours. We just needed to have set the tone with the customer, and they just didn't get a confirmation email. And we can build an automated confirmation email with our engineers, but we want to hold off on that until we're getting 100 requests of this a month or whatever some threshold of scalability is. And then in the meantime, it's until 100 requests a month, we can manually do it. We'll have the template, but we'll do the control C, control V send ourselves. Is that helpful, Chris?
Yeah, that's very, very helpful. And when you talked about the real issue versus expectations, I think that's especially for maybe, I would say anyone, but especially smaller teams, that's massive because to your point, it's like, oh, wow, it took a day to get back. But if you have the data and statistics to tell the story that you're actually a day quicker than when people are getting it in a day, it just went from being a problem to now being, that was really fast. It only took a day. So I, I really like that. So thank you for sharing that. That was a great anecdote. Um, happy to, I will shut up now. If there's any questions anyone has or wants to chat, open it up to anything else. I'm sure there's something out there.
I had a question that you mentioned the fake door test, meaning like putting buttons that don't do anything to see what people are interested in. It's like one of those examples that everybody would like, every startup book you read, every blog post you read, like says like you should do this. It's very hard to do, to get yourself to say, I'm okay with a bad customer experience, especially you mentioned customer acquisition costs can be really high. So now you're running the risk of really upsetting the very few customers that you paid very expensively to use your app, and you're giving them a bad experience. How can you give, it would be great to see some examples of what are the kind of fake door tests have you gotten, has there been any customer backlash? Have you heard about customer complaining, oh, I clicked on this button, it didn't work, right? Like, I'd love to hear more about that experience.
Absolutely. And I'll give you a couple examples from different environments and different types. So we started out direct to consumer. Pretty much the only way you could do it was the app and then eventually the app and the website. But we knew that we had this opportunity. We had some underlying tech that made it easier for us to quote and bind insurance policies. Really boring stuff, won't get into the details, but essentially it made partners' lives easier. And so a partner that might not have made money trying to sell pet insurance with a competitor, all of a sudden would be able to make a little bit of money and it wouldn't be an inconvenience. So what we did is we put up a landing page for an API. Said, hey, we've got an API. If you've got an existing audience of dog owners or pet owners, love to kind of hear how we can work together. And one of our, to date, one of our biggest, best partnerships that we're working on came through that. And just put into essentially a Squarespace form, hey, this is us. Like, can't does your product have this functionality? They asked a very specific question, like, does your product cover cats, for instance? That's not what they asked, but an example. And started a conversation, had a phone call. 3 months later, we're implementing a deal that's probably worth 7, 8 figures of reoccurring revenue through their platform, purely them reaching out to us. It wasn't gonna have to be built the next day. We knew that any of these partnerships, because it's B2B, we could have a little bit of time to make a deal. And on the business time, we can move things faster or slower if we need, right? If they say we're willing to pay a huge implementation fee, great, we'll have it done ASAP and we'll pay more engineers. If they want to work on our pace, or if they're anxious to get it going, we can slow it down with negotiations. We can negotiate a little bit more, things like that. Then a direct to consumer example. When we first built our app, one thing we found is we launched in Ohio, but we're launching software technology platforms. So, what's to stop someone in New York or another state from downloading it, trying to get an insurance quote, and then being really frustrated, like you said? We just spent money trying to acquire a lead if it's paid, and we didn't target them by the state or so on, and they came on and then we're not even able to sell them something. We're just saying, sorry, we'll be in your state soon. That's a really bad feeling, but it allows us to measure who's coming from what states before we're actually investing in the licenses to get there. And what we changed is the expectations. So in the meantime, we said, hey, um, what we found is, like you said, about 8 out of 10 people, we initially only launched in Colorado. And so we said 8 out of 10 people, we're not even able to quote. That's a problem. We need to set expectations. So instead of an error screen, it's a we're sorry screen. From the we're sorry screen, it's hey, here's this kind of free feature you can use in the meantime, and so on. So it's kind of couching expectations, slowly kind of improving it. We use a wait list. We like to do trials of different things. And if 1 or 2 people try to click it, then we say, oh, we're kind of all out at the moment. It's kind of weird with an intangible product or service to say you're all out, but sometimes that's a good thing to do, to kind of say, okay, they care about it enough to put money down and wait, or they want to wait but they're not going to put money down, or they're going to say, okay, well then let me know when you are in my state. That's a good litmus test as well in terms of demand, and just kind of classifying willingness to pay. Is that helpful, Oscar? Good
That was
question.
interesting, especially the B2C side. So it sounds like you considered the acquisition cost as worth it to get that data customer feedback.
Exactly, exactly.
So I have a question, and I bet you never thought that a benefit broker would be on this call. Um, but so try not to monopolize the conversation. Knowing that Nationwide is the Goliath in this industry, they are by far the biggest. And there are lots of other pet insurance carriers out there. From an entrepreneurial perspective, how did you go about addressing that? And when you're starting to get the idea to go forward with it, knowing that someone already dominates the market, if there's an Amazon or, a Google that's already doing something, how does that process go for you?
Absolutely. Yeah. So I think, Zach, what you're getting at is how was I evaluating the market when I decided to go into pet insurance? So, and that came down to a couple things. And it started with a mentor of mine here in Columbus. I had returned from spending a year abroad. Said, if you're going to start a business here, it should be insurance, food, or fashion, because that's where the capital is and the talent is. And I knew painfully from firsthand experience, it's incredibly important to build a business that has a knowledge base and support system around where you live. I had tried to build a travel startup that would do weekend adventures, and there's no travel expertise in Columbus, Ohio. It's just not what we're known for. But we had Root Insurance and Nationwide and Grange and State Auto and Beam and Kin and Branch and all these awesome players in the area, creating a just enormous amount of wealth and talent. Um, so that was step one. Is there kind of a local ecosystem that can support my business? Step two, is it growing enough? So pet insurance is growing over 20% annually in terms of premiums. And it's that aligns with kind of a cultural trend, which is a shift from ownership to companionship. The dog is no longer sleeping in your yard, maybe not even in your house, it's sleeping on your bed. And that is a psychological shift in your how you spend money and how you kind of interact with this part of your life. That's a good opportunity in my mind. Um, See ya, Christina. Thanks for joining. Uh, so that was part of it. Nationwide's a great company, and so I just want to be very precise with how I kind of talk about them because they are a great organization and a great member of Ohio and Columbus. When I think about our competitors, I want to make sure that we can win from a competitive advantage and a differentiated standpoint. And we are building better technology to effectively be more like a Stripe or in a firm than, let's say, a Nationwide, if that makes sense. We are effectively an embedded fintech partner for everything from the brokers to the vets and so on. And we can customize the solution a little bit more. Nationwide won't even work with a company with less than 100 employees. So those are the types of opportunities where we can build really great experiences for small to medium organizations because we not only do the pet insurance, but we actually build engagement or we do these types of other things. So that's kind of the mindset of it. Um, I would be a lot more concerned if I was going into a space that um, was massive and dominated by one person. The beauty of pet is while it's growing super fast, it's still relatively small compared to auto, compared to home and some of these other lines in insurance. And then within pet, it's small of a line compared to the vet healthcare overall. And then dog food is still just the 800-pound gorilla. So that's kind of how I think about it. We can use that as a nice niche to then do everything from lending and financial transactions when you acquire a dog from a breeder to basically any sort of transaction in the pet space. We want to kind of own that experience. But is that helpful, Zach? Kind of my thought process?
Yeah, no, it was good to kind of hear that. Yeah, I'm not going to monopolize the benefits talk.
Well, and I just dropped in the chat. There's a Zach tiered question about being in the same city and town as Columbus. A media publication called The Org. It's how Columbus became the hub for American insurance innovation, and cites Nationwide and a bunch of others that have been around for a really long time. And then in the past few years, Root just IPO'd on the NASDAQ. Bold Penguin was just acquired by American Family Insurance, I believe. Branch Insurance is another one. Bingo. So there's these it's cool to see this, and I think that's what kind of the article says, is that that's where a lot of people come from, and a lot of the founders and employees of these companies have gone from the big co's and then will join a startup because they have the knowledge in this space. So it's Matt, it's really fun to see, your company being among the the newest to this space of insure tech and insurance innovation. And yeah, hopefully it's on its way. It sounds like it is to being the next in line for you know, a lot of success and putting Ohio and Columbus specifically on the map. So.
Well, thank you, Chris. Thank you all for joining. You can reach me on LinkedIn. I'm super accessible. You can also go to joinbingo.co. If you need anything, you can find me on there as well. And happy to answer any questions or reach out as well to do coffee.
Cool. Well, everyone, thank you so much. Matt, thank you for putting together this really terrific conversation. And I've got my notes, and definitely love following along to what you all are building. And it's really awesome to see. And thank you again so much. And thank you everyone for joining us today. This was a lot of fun. We do one of these a month along with a bunch of other events and programs. Just go to ohiox.org/events. I know a bunch of you probably get our emails, but it's all made possible by Matt and others that are doing the work. So Matt, thank you so much. And I hope everyone has a good evening.
Thank you, Chris. Have a good one.